Today's pullback comes after a standout week for the bulls, of course, which saw the S&P jump more than 5%. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors Head of Research and Fundstrat Capital CIO. Happy Monday, Tom. Good to see you in.
Yeah, happy Monday.
You really haven't been unnerved by anything since Friday night, have you?
No. I don't know if there's much signal in the downgrade Friday, because I think the first AAA downgrade was signal from 2011. I don't think Moody's had any information that we didn't have on Friday afternoon. So I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity.
That said, you're not discounting the notion that the vigilantes have been reawakened a bit?
I think everyone should be aware the U.S. has an unsustainable path for debt, but I think the real signal will be when an auction fails. That happened a few years ago, and then we realized that was the time to really pay attention to the fact that we have debt sustainability issues. But I think a downgrade itself, I don't think it makes this much signal.
So we reclaim the 200-day. Is that a clear path to a new high, as some of the trading desks suggested this morning?
Yeah, in fact, I think today will be an interesting test. I'm assuming today's pullback's going to be really shallow, might even close positive, because most investors rage sold at the bottom in April, and then they doubted.
I hadn't heard that.
Yeah,
that's a good one. Is that your own, or have you heard that other places?
I've heard that. Yeah,
rage sold.
Yeah.
Sorry, go ahead.
And so as the markets climbed, a lot of people sort of doubted, thought it was a rally that would fail, and so I think there's $7 trillion cash on the sidelines, enormous skepticism from our institutional clients, and a lot of folks sort of bet outside the U.S. So I think there's going to be a lot of chasing into year-end.
Although, a lot of shorts have been covered already, though. A lot of the hedge fund guys who actually got it wrong and rage sold, to your point, are in a very different position right now in terms of positioning.
Yes. No, and there's a difference between being short and versus having positive beta to risk assets. So I think most people might be flat on their books. But if the market is above its 200-day, showing this sort of impulsive buying, and you're flat, that means you're underinvested.
How are you evaluating potential changes in tax policy? Obviously, the market has been very reactive to any headlines on tariffs. What about this one?
In fact, I think as we start to think about 2026, and it makes sense because we're in the mid-year, there is not only tax policy that can be a tailwind. It looks like it's going to be, but it's deregulation.
Sure.
I mean, several published pieces show that regulatory cost for U.S. companies is over $2 trillion, maybe as much as $3 trillion. It's a bigger deal than the tax cuts itself.
Yeah, obviously we've been waiting for some time about the regulation. So in this environment, the ever bullish Tom Lee, what are you looking at when it comes specifically to the Magnificent Seven? We watch those so carefully, but the Nasdaq, of course, under pressure here today.
We think the Mag 7 is going to lead into year end because it's a group that fell first. It was widely owned, but it really got washed out. I think Tesla was a really good sort of case study. So I think the Mag 7 is going to reclaim its old highs. That's, of course, why the S&P should regain its old highs and of course, actually move above that before year end.
And what about financials? That's obviously an area that so many people were looking to early on. Is that still on your radar?
Yeah, financials are important. You need the banks to rally. They have been. If I was going to make a case for multiples expanding, financials is one place because not only did they prove themselves actually pretty resilient during Fed hikes and during this turmoil, but they're kind of more tech-intensive companies with better credit profiles. So I think multiples should go up.
If we do revisit the highs, what needs to happen to push past that? I mean, how firm of resistance will it be?
Well, I think investors have to look past tariffs because if we're only trading tariff headlines, the markets are going to be range-bound. But again, as I look at 2026, I'm looking at companies that are battle-tested. They survived the tariff headlines. There might be freer trade. That's an upside to earnings.
Freer trade than we thought.
Yes, than we thought, yes.
But earnings estimates have come down, have they not?
Yeah, but they're going to flex in both directions, meaning I think if we have deregulation, possible improved ability to export, tax cuts, that actually all supports higher earnings. But I also think the multiple for the S&P should be going up because, again, we've taken away a black swan event. I mean, we did, the February to April period was a black swan for stocks.
Do you think the downgrade hurts the push for tax cuts?
I think it's going to have almost no effect.
No effect?
Yeah, because at the end of the day, the bond market prices what they think the rating should be.
I don't mean from the market standpoint. I mean from the political optics standpoint.
Yeah, it might, but at the end of the day, the U.S. really wasn't AAA anymore because it was only 1 out of 3, so it's like not even a split rating, AAA.
So, Tom, is there anything out there? I mean, and to be fair, you've been bullish throughout. You were right during this period when a lot of others sort of, whether they rage sold or just got upset in general. But what, if anything, is top of mind for you in terms of concern?
Well, I think the most important is the consumer has to stay healthy because right now we're seeing this huge divergence, right? Like the UMich surveys show banana-level inflation expectations, but the realized is low. If the consumer gets super cautious and retraces, then we have a recession. So I think it does come into consumers have to stay confident and keep their jobs.
And so you're a believer in the data versus the sentiment?
Yeah, at the moment, this divergence between inflation and realized is actually the largest, I think, ever recorded for UMich. And so I would say as long as inflation doesn't explode, then the consumer has marginally a chance to become even more positive.
Wow.
Yeah, a lot of your former colleagues at JPM think that the hard data will catch up to the survey work.
Yes. And I'm paying attention because, of course, JP Morgan, they do a lot of homework and they've got credit card data, so we do have to watch it.
Sure.
So we just have to hope for the best.
Tom,
always.
Good to see you. Thanks, Tom.
Negotiating leverage that President Trump is talking about here is if you don't want to negotiate, then it will spring back to the April 2nd level.
Secretary Bessent is right. The president is adamant that you've got 90 days to do this. Let's not dilly-dally.
All right, Tiffany, what do you make of this?
Well, this is really, this is something that no other administration has ever been able to do in our country. It's something that Democrat and Republicans have talked about a lot. They've talked about tariffs. They've talked about the need for setting the stage and showing leadership around the world. It's just no one's been able to do it. President Trump is doing it. And I mean, it's unprecedented what we are seeing. We have the UK, United Kingdom, and China coming to the table, talking about deals. We also have India, who's offering no tariffs. We have Vietnam, who's already offered no tariffs. This is a very strong positioning, and President Trump is showing that he is leading through peace, through strength. This is something we haven't had in a very long time in this country, and he's a businessman. This is why the American people elected him to negotiate and get deals that work for America, not just in the short term, but in the long term.
Jackie, the market trying to read the tea leaves. The Dow's up 0.3%. The S&P turns positive. The NASDAQ unchanged now on the day. So coming up off of some of the lows that we had this morning is I think people are trying to digest, is this a threat? Is it a negotiation tactic to get people to speed things along? How do you read this?
I think they're trying to shepherd the ducks to come to the table a little faster, even though they've made great progress, Tiffany, to your point, for sure. And don't discount President Trump. I think he means it when he says, if you don't do what you're supposed to do, yes, I will re-implement these tariffs. I'm not saying that it's an idle threat. I just think it's meant to prod everybody along. And there has been tremendous progress made, but the market and the American people want to see more ink deals. He said these deals are very hard to paper. We understand that. But we need to see a little more from the trade negotiations. And I think the president is aware of that as well. And so, you get Scott Bessent to sit there and say that, and people are listening very closely, and they know that he'll take it seriously and he'll see it through if he has to. And so it'll motivate them for sure, I think.
David, it is shocking to me that the S&P 500 is now 290 points higher than it was on April 2nd, Liberation Day at 4 p.m. Right before. So it has been a full round trip, if not more. Yes. But I'm wondering if we're talking about Liberation Day and tariffs, and Dagan has mentioned this, I want her to weigh in after this. It's a revenue raiser. Mm-hmm. But how much more important is this sort of threat of a tariff, threat of Liberation Day tariffs, given the pressure we've seen about the downgrade that we talked about from Moody's, about a deficit that it doesn't look like it's going to be normalized anytime soon? How much more important and added urgency does this create?
Well, I think realism is starting to affect not only the Trump administration in terms of what they're trying to do, and Bessent saying, 90 days in 90 countries just isn't going to be possible. They're now talking about maybe regionalizing these deals. to have some areas of Africa, some areas of Asia. The problem I have with that, they're talking about Central America as one unit. You can't treat the Sandinistas in Nicaragua the same way you're going to treat our ally Bukele in El Salvador. So there are differences even if you try to regionalize it. So it's going to be tough. But again, the markets realize that first position, as Besant said right at the beginning, remember he said this is the high water mark, right when we had Liberation Day in the beginning of April. And that was the high water mark. It may go up a little bit from where it is now, again, on the way to deals. But I think the market is a lot calmer, and you see it with the results. I mean, as you mentioned, the market is now recovering from its deathly fear of tariffs.
Dig in.
And also, and I think all along, if you just listen closely to the things that are repeated over and over again, it's also that 10% is the baseline.
Yes.
And I have repeated myself until I am blue in the face. If only I would shut up. But revenue is important to the president, and from tariffs, and 10% will be on the table and will be in place to raise revenue, because President Trump views the United States as, you're coming here and using us. We're a terrific customer, so you got to pay a cover charge to get into the club. And
remember those days?
Wow. As wackadoodle as that chart was that the president held up with the reciprocal tariffs, which weren't based on actual tariffs. Thank you, Peter Navarro. It still forced all of those nations to come and negotiate with us. It still was such a dramatic wake-up call for them that is what has kind of pushed everybody to pick up the phone or maybe text message with the White House and say, all right, let's right-size our trading relationship. Let's level this trading field. But the same goes with, it's also time for the Republicans to get their act together and put together and push out this pro-growth package, because the president's doing what he can on the trade side, and we need to have ballast. Who talks about the barbell? Is it you or is it Brian? Anyway, we need some ballast, some growth ballast on the other side.
Besant has talked about the barbell when he was like the financial and then the tech, and then we're missing the middle.
I'm talking about the barbell with some pro-growth tax cuts.
Yeah. So Tiffany, weigh in on that, right? Because the last hour we were talking about a downgrade, right?
Right.
Late, unexpected, no one cares, except that this time yields tend to suggest that we care a little bit more than we did 15 years ago when S&P downgraded us, just by the mere fact that we're 2% higher on the 10-year yield than we were back there. And we are thinking about financing all of this, and you need a pro-growth, pro-supply side solution. Your thoughts?
Yeah, look, it's a place, I mean, that's not a good place to be necessarily, but at the same time, we have to look at what the last 4 years were and what President Trump was handed. And those decisions that you have to make, obviously we know the market doesn't like change, it likes stability, and President Trump's coming in, and it's a multi-pronged approach. It's not just tariffs, it's also the pro-growth package that Congress does need to get their act together and pass. When you look at massive and rapid deregulation, tax cuts, energy. No one really talks about the energy aspect either, but pro-energy package is in there as well, which is huge for the American consumer and the American worker. That's what will spur business out in the real America, and that's what they're watching. They're kind of holding back and watching, not necessarily the tariffs, maybe to a certain degree, but they're watching that tax cut, and they want to know that it's going to be permanent. And so businesses are holding back a little bit right now. I think we will start to see those numbers change once President Trump's big vision for longer-term economic stability, and it's not just economic stability, it's also national security and safety for our country.
Can I just say one thing about Moody's? Remember, it was Moody's and Fitch and S&P that helped to create the financial crisis
Bingo.
in 2008 and 9 by putting all these great credit ratings on subprime mortgages by people who couldn't pay them back. So, you got to be a little wary. That's not Moody's is not the end all in calling things right.
I think this market is taking that with a grain of salt.
I
think
agree.
you're right. I think.
Well,
you're
and
right.
the irony is Florida can issue debt and they're AAA rated, but the United States isn't. Now, Florida has a governor who has balanced the budget and has a surplus,
Right.
but I'm like, you're really telling me that Florida is safer than the United States government? The irony of all of that is not lost on any of us.
Florida doesn't have its own currency.
Bingo. Exactly. They can't print their money.
Congress needs to rein in their spending. And this is their opportunity to show the American people if they can really deliver.